CRH brushes aside fears of huge impact of virus on U.S. economy. CRH has said it has seen no impact from the coronavirus on its business and it is way too early to say if it will hit its balance sheet this year. However, shares in the Irish-based building materials group fell by over 3% as fears of the virus decimating the global economy continued to grow. The US is CRH's largest market, closely followed by Europe, while it also has operations in China and Asia. Speaking as the group announced record earnings for 2019, CRH's finance director Shannon Murphy said it is very early days in terms of being able to gauge any impact from the virus on trade or GDP in CRH's key geographical markets, namely North America and mainland Europe. Mr. Murphy said CRH's relatively small operation in China, where the group owns a 26% stake in a joint venture, has seen low levels of activity of late, but mainly due to it being a traditionally quiet time of year for the market. CRH said it generated record earnings of €4.2 billion last year, 25% up on the previous year. Organic earnings grew by 7%. Group revenue was ahead by 6% at €28.3 billion. The group also announced a 15% rise in full-year dividend, to 83c per share, way up on the 6% increase in payouts it announced on the strength of its 2018 performance. The 15% dividend rise was prompted by strong cash generation of €3.5 billion, which Mr. Murphy said gives the group a number of options for boosting value for shareholders. He suggested CRH's share buyback program will continue after the current €200 million tranche completes at the end of next month, with a further extension likely to be announced ahead of the group's annual shareholders meeting in April. With a continuing focus on margin expansion, cash generation and enhanced returns for shareholders, we believe that 2020 will be a year of further progress for the group, CRH Chief Executive Albert Manifold said. CRH spent €700 million on acquisitions last year and made €2.1 billion from disposals. The sale of its European distribution business made up the bulk of the latter figure, but the group has also announced the sale of its Indian joint venture mill, for €300 million. Management said the group's acquisition pipeline remains healthy. Asked about a much-anticipated sale of its Philippines business, CRH said it would keep it under review, having seen that business double profits last year, with further profit growth anticipated this year. CRH also said it is extremely well placed to benefit from a planned boom in infrastructure spend in the UK and the US, particularly the building of Britain's planned new HS2 high-speed rail network. The group has already won 2/3 of the HS2 contracts already awarded. For more on this story, visit the news article link.